Traders, welcome back. So we are on video 4 now, part 4 of this multi-part series. We're talking about developing patience and knowing when to trade. Recap very quickly because I know you've probably just come here. If you haven't been seeing the other videos and you've just come here, you probably should go and check out video 1. Start there's a good point to start. We've got 3 more videos coming up after this one. Or maybe 2, we'll see how we get on. So what we're going to do now is we're going to look at, or we have looked at, should I say, the predictability of people under certain pressures and conditions. That's the whole point of it, right? That's why I believe that my edge is greater when we've got pressure, when we've got people under some kind of external influence, rather than the analogy you had in the last slide, which was, prices ticking up and down, up and down. How can I predict the next one? I can't. How can I predict when I stop someone in the street whether he thinks the market's going to go up tomorrow or not? If I surveyed 100 people, I can never guess what they were going to do. And that's ultimately what I feel we're trying to do when there's no external influence. So if we can identify a price pattern that reveals one of these conditions, i.e. the condition of people under extreme stress, people under extreme panic, people under FOMO, institutions driving money in or out, those kind of things that we talked about in the previous video and talked about at the beginning. So if we can have price patterns that ultimately identify and reveal those conditions, then our edge increases dramatically, right? Does that make sense? Because we talked about the randomized people, just asking them to vote when the market's going to go up or down. Then we talked about asking them to know what you're going to do with the market. Are you going to buy or sell when they're under extreme pain or pressure, or they're in fear of missing out? There's a bit more of a decision, right? If you surveyed 100 people about Bitcoin and they've all been watching it going up every day for the past 10 days, and you said to them, hey, do you think Bitcoin's going up or do you think it's going down? They're probably going to be like, yeah, I think it's going up, I think it's going up. You probably get more people saying that because of the FOMO effect than the other. So we can start to identify price patterns that fit into that. We don't have to go into those much in this specific video. Like I say, stay subscribed for more kind of updates on that in the future. But identifying a price pattern that reveals these conditions, our edge increases dramatically, guys. I truly believe that if we can get a price pattern that aligns with conditions that work for us, and like I say, my conditions may not be yours, but if they do align nicely, we have opportunity to do well from the markets. Okay, so if we look from a short-term trader perspective, and I know we're not all short-term traders here, and specifically I'm not just a short-term trader, but this is looking from a short-term trader's perspective, and most of us are kind of positioning for perhaps a swing trade. Maybe we are looking for months, but there's maybe less of us investing for multiple years. So we're positioning based on a thesis, okay, rather than a short-term thesis, rather than a longer-term thesis that we have to sit for. So the idea behind this comment is, if we can predict short-term movement in price based on a perceived perception of people's transaction or next transaction, like the stuck short, like the max pain on the flush, like the retail people buying a breakout and it faking them out, then going through lows, all those kind of stuff. If we can position on that, then or if we are short-term traders, that's what we're looking for, then we've got a better edge of understanding where the next hour trade is going to go. Now, that might be fine if you're day trading, but what about swing traders? Well, you can utilize that and you can say, well, actually, that next hour can give me a leg up and I can hold this thing now for multiple days, multiple weeks, whatever I want to do, because I've read that short-term momentum and shift in price and what have you. And so I can jump on board that and kind of utilize that as a leg on for my multiple swing trades. So it's identifying the ability, and even if you're not a short-term trader, guys, the fact that you're a retail trader means that you can put your capital to work when it suits you. You don't have to wait until I'll have it at work all the time, like a lot of hedge fund managers do. You don't have to be constantly invested. You don't have to be making a really calculated decision to rotate out of cash, as hedge funds do. If they're rotating from stocks to cash, it's a big decision. They can't just rotate back in and out every day. We can. We're in cash. We put our cash to capital at work. We do some work with it. We take some risk. Hopefully make a return. We pull it back out again. We wait again. We put it to work. We take it back out again. Day traders on a higher frequency basis, swing traders less so, but ultimately, however we sit in that, even if we're in the investors, it's still the same, isn't it, guys? We're just putting our cash, our capital at work when we believe there is an edge. All right, guys, stay tuned for parts 5, I think we're on now, where we're going to go into kind of looking at what traders are feeling and etc. and all that kind of good stuff. See you next one, guys. Bye bye.